Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. A lot of information to cover. The first thing I want to look at is the up, and up. What has been going on right now in the markets and everything connected to it. Of course, what that means to you, your pension, your retirement account, and your investments. The second thing is the mortgage too far. How far have we gone? I'll show you some details around that. The third thing is the commodities boom over? Well, I want to give you a little bit more than that here to look at the nuances and how key this is for what's coming. All of that and more. Let's begin right here. The link between soaring food prices and political instability, probably the most important thing you are going to see today, and in fact, over the next while. Because as food prices rise, it starts to put a lot of pressure on people. Now, certainly, there are a group of people who, just cannot make ends meet. And suddenly, their food prices rise and they've got big problems. So we see that people have been going to the food banks more than ever before. We watch as 40 plus million people in the United States alone are on food stamps, SNAP. This is a huge thing keeping people from basically, let's just say, losing it. And we know what happens time and time again. The prices get too high, revolt. This is just showing us in previous instances, 2008, 2011, and now we have surpassed those prices from those two previous situations. Food price crisis riots of 2008, as well as the Arab Spring in 2011. This isn't the only time we have seen it in the past, I could tell you that. I have read about this many times before, and you could see right now. The fact that we are beyond that today is extremely worrisome. There has been some limited breakouts as we've noticed this. I think I mentioned Iraq before here a couple weeks ago. And that, of course, will just continue to spread. Food and energy, if it was, the latest NFTs or whatever Kim Kardashian is selling that suddenly is increasing in price, not a big deal. But when it's food and energy, it is. Okay? Watch this very carefully. Take care of your own particular circumstances. That's my message to you. Look at this. Homeowners spin soaring prices into U.S. real estate riches. Cash out refis, the refinances, enable newbie investors to buy second or third houses or more to capitalize on surging rental demand. Now, you may have heard of this before and what people have been doing and what people can do. They have a lot of equity in their home. So they take out that equity and they use that to buy additional houses. Now, that's okay. And that works very well. And investors do this all the time. And of course, this can apply not just to a personal property, but to investment properties as well. If you've got $1 million in equity in this real estate investment, you could take some of that out. You take a mortgage on that property and you can use that money to buy another property. And then you have the renter paying down the mortgage. It's great, right? The only problem, as they mentioned here, far down in the article, is that, well, there comes a time in which people can't pay their rent. And so that puts a lot of pressure on the landlord. Suddenly they have to come up with money somewhere. And if they're running real narrow margins, the cash flow is minimal, or maybe they're actually a little bit underwater in that, then you got a problem. And by the way, cash flow, it's important, let me tell you. They talk about the Burr method. You may have heard of this before, popularized by, right here, Bigger Pockets, BRR. There's 4 R's, or you could look at it as 3 R's, but essentially buy, rehab, rent, refinance, and the last one being repeat. So this is important, right? You buy a home, you fix it up, you rent it out, and then you go to the bank because you already have a renter in there in place and refinance that property. You pull the cash out. They talk about different examples and people doing it and working very, very well. But even Greg McBride, the individual at bankrate.com saying this, While leverage can turbocharge your returns when prices are on the way up, it can accelerate the losses on the way down. If there's a downturn in the economy, all of a sudden tenants are not able to pay their rent. That creates a cash flow issue. As well as they mentioned in here, just more issues, essentially saying, look, this is all good when prices are moving up. It's a big problem when prices are moving down, or you as the individual, suddenly you took all of that out of your property, and now you can't work necessarily. So you're basically pulling that equity out, which is kind of like a savings in a way, and you diminish that. Hopefully those people can get a job. Hopefully the economy won't go down. But we just got to watch what we're doing. What's happening right now today absolutely is not the case of what we have seen before in 2008. It's just not. So I think people need to be aware of that. And that brings me here. Small trucking companies are getting squeezed by soaring diesel prices. Fuel costs have spiked at an unprecedented pace following Russia's invasion of Ukraine, posing a challenge for freight haulers operating on tight margins and light capital. Of course, we've seen the difficulties that have been experienced. Anybody who has had to move products left, right, and center know that this has become more difficult. Certainly, depends on where you are. Areas along the West Coast have been hit a lot harder than on the East Coast. And, there's been many issues. The employees demanding more pay, companies having to give more pay. This is obviously affecting the bottom line of these companies. There's a lot of consolidations and mergers, acquisitions that are going on right now. So many are led to believe that what we are seeing, inflation going crazy, supply chain problems, the conditions with Russia, everything. Sell stocks, sell stocks. While others are saying, this is maximum fear. You should be buying stocks. I would definitely disagree that this is maximum fear. Not at all. The market has been shaking that off to a large degree, even really in the depths of this. I don't even want to call it a dip. Well, a speed bump in the road. Certainly, there has been almost, no pessimism when you really look at it. Really, rising stock markets have their heads stuck in the sand. Actually, it's down here. The stock markets have their head stuck in the sands. The bond market, they're awake and paying attention. And what has been happening recently? Yield curve inversions are happening at a very fast pace right now, signaling the bond market saying, you better watch out. But when that happens, it's not overnight. It doesn't happen overnight. So there are still possibilities to actually be making money in the stock market. But what does that mean for the future of the stock market? Well, don't worry. The market is forward looking. Yes, that was a big quote we heard many times before in 2020. We also heard the Fed. What was it? Don't fight the Fed. That's probably my favorite one, because today, if the Fed is, pulling back on support, that would mean that you should pull back on your purchases. Well, no, of course, now we don't want to use that quote anymore. I don't know. All I can tell you is that what we are seeing today is very, very unusual. It's an anomaly. This doesn't happen very often. Extreme levels of debt, rising interest rates, rising inflation. Better watch out. That's all. Home buyers hit with U.S. mortgage rates surging the most since 1994. Some are forced to wait it out as debt costs climb out of reach. This is interesting. In this article here, they're talking about people who, because the mortgage rates are rising so fast, the brokers are basically telling them, look, if you don't get on this right away, you're literally not going to be able to afford it, which is crazy, because if a small move, even if it's let's say, I don't know, 0.5%. If that's going to impact you, you should not be buying into this home because it's too tight. It is too tight. And I understand the prices keep going up. I get it. But when money is that tight, what happens in a downward economy? I mean, you're going to be squished. It's just showing us how down to the wire, how I wish I had better words for it, but people are pushing themselves to the edge, and I never like to see that. That's all. Because it's not as if it's, some boat that somebody wants to get, or, the latest fad, the latest iPhone. No, this is a place for living. It's just a house. It's supposed to be just a house. And today it's become so unaffordable. And in one of those areas where the housing is extremely unaffordable, and we've seen some migration trends, New York has experienced a significant population shift last year. 4 of its 5 counties losing a greater percentage of people than almost any other major county in the United States. If I'm not mistaken, it was 7%. That, look at this, right there. Manhattan lost 6.9% of its population in 2021. That, to me, I mean, I had to read it over and over again. 7%. I mean, it's so extreme. And you look at the different areas, it depends, 3.5, 3.2, and so on. But it is so extreme, to say the least. And why? Prices are so high. Inflation's getting worse. I've seen investors come in and be buying up a lot of these places. But you're just seeing a very interesting example of what happens when people can't take it anymore. Now, one thing that has come down from its peak has been lumber. Right now, it's actually down below 1,000. So imagine it's at a historical advantage, historical level. Let's just say 400 or 500. It moves up to 1,700. It moved down to 450, and then moved back up above 1,300. So it's been this like huge swings up and down. And here it is today, sitting under 1,000. And they're saying essentially that the renovation boom slows down as soaring wood costs crimp demand. So I think people are kind of saying, mortgage rates are rising. Prices, prices are just getting too hot and heavy. I'm staying out of this. We will see what happens. It's a little bit, speculation behind this really boosts up the prices. So we don't know until it comes a little later of what's going on exactly. EU leaders have stepped back from imposing an immediate embargo on Russian crude and petroleum products imports as the impracticality of the policy had become clear. Come on. We talked about this here on the channel. They can't do that. They just can't do that. It's so extreme. As they say here, from one day to the next would mean plunging our country and the whole of Europe into a recession. It's the Chancellor of Germany. Of course, you become so dependent on a country, you can't just cut it off. I mean, I don't know what they're going to do, but I can tell you right now, rising prices brings social unrest. That's the important point. U.S. oil boomtowns risk ghost town future. Essentially, what they're saying is these areas so dependent on oil, they do really well during oil. The problem is, what is the future demand 30 years from now? 20 years, whatever it is. Well, where are the governments putting money? The governments are putting money into the green energy. And so that's just a matter of fact. So we know where the investment is going. Maybe private institutions will, but look at coal. Yeah, there's some serious demand, but part of that is because they're not opening up new coal mines. Because they say, look, you're going to get heavily taxed. You're going to get punished in your own way if you don't set up a solar panel company. I mean, that's just the way it is. So as an investor, we should have that mentality and realize we got to watch out what's happening in the future trends. So that's it. I hope you appreciate this information. If you did, support the channel by clicking that like button. Less than 10% of people usually do that. So I want to thank you to all those out there who do so. Are you a subscriber yet? If not, you've got to join over 280,000 knowledgeable, informative people that are always leaving good information down in the comments section below. So hit that subscribe button, hit the like, and I'll see you on the next one. Take care.